Hi, welcome to ATHENASIA. I'm Laurent Timmermans. In this video, I will be giving you 3 tips to reduce your taxation in Hong Kong as an entrepreneur. So if you own a limited company and live in Hong Kong, this is a video that you cannot miss, really. So before we start, let's go through a little accounting 101 / taxation 101 so that you can really understand these whole tips a bit better. So when we look at accounting, we have revenues, which is basically your sales. Out of those revenue, we'll take out cost and expenses, and then we'll have a profit before tax. Then we'll have to pay the profit tax or the corporate tax. So this is 8.25% to 16.5% in Hong Kong. Now, why this difference? Well, first 8.25% is for your first 2 million Hong Kong dollars profit, not turnover, profit. The next 16.5% will be for everything above 2 million Hong Kong dollars. So if you make $3 million profit, $2 million will be taxed at 8.25, and 1 million will be taxed at 16.5%. Okay, that's how it works. After that, you have your profit after tax, and then normally that's the time you would have to pay dividend tax if you want to get the money out of the company. If you're in Hong Kong, there is 0% tax on dividends, so it's pretty simple. Now, if you live somewhere else, you might have to pay dividend tax on this money, even if you have a limited company in Hong Kong. And then basically after that, this is the money that you took out and have in your pocket and can just spend as you deem fit. Okay, now let's look at those 3 tips now. In the expenses, what we will have, so all these tips will actually touch up the expense side. So in the expense in Hong Kong, you will have normal business expenses that you can think of. We'll cover them after. Business expenses, I will tell you a bit more. So the business expense, I would say these are business expenses that in other jurisdictions, people will say, oh, really, you can expense that? But in Hong Kong, it's like, yeah, sure, why not? You know, so we'll cover that. And then we have the salary. So when you pay yourself a salary, this is an expense as well. Okay, so you have to pay tax on the side for your salary, but the salary itself is cost to the business. Then you have the option of having a rent-free benefit. So the 3 tips we'll have today will cover 1, the business expenses, 2, the salaries, and 3, what we call the rent-free benefit. So first tip, business expenses and business expenses. As per the law, as per the section 16 of the Inland Revenue Ordinance, generally all outgoings and expenses to the extent to which they have been incurred by the taxpayer in the production of chargeable profits are allowed as deductions. So this is basically the rule. So if your expense is helping you to make a profit, you can expense it. Okay, that's as simple as that. So what can be expensed clearly? Well, your COGS, obviously. So that's basically cost of goods sold. So the cost of your product if you're selling products. Salaries, rent, food and beverage, utilities, office supply, clothes, travels, etc. Okay. Now, when I say, and what about the business expenses? Well, you know, in certain countries in Europe, for example, if you go with your clients for a dinner, you know, you do a business dinner or business lunch, basically you have to explain and prove why this lunch is necessary for the business. You know, sometimes as an entrepreneur, you even have to remove your part of this expense and say, okay, I ate, so this is not business. Well, in Hong Kong, this is not the way it works. No, you basically go to the IRD and you give the receipt, say, okay, I was in the business lunch, that's it. You know, there's no need to explain forever like why you were there. So this is really neat. And this enables you to pass quite a lot of expenses that sometimes in other countries will be like, I don't want the trouble. Same thing with the clothes. No, in Hong Kong, if you want to have 20 suits made for you to do your business, there's no problem. As I said in previous video, I don't wear suit in the beach. You know, in my case, you know, when I make a jacket, when I make a suit, is because of the business. It's not because I want to. No, so all that you can pass in the business. Travels as well. Yeah. Okay, so no need to justify every single thing, okay, like in other jurisdictions. Another thing you have to be careful about in these expenses is capital expenses and capital expenditure, is because there is no capital gain in Hong Kong. Okay, therefore, if there's no capital gain, you don't tax capital gain, the government say, but then we cannot have a capital expenditure, right? So that's the logic behind the fact that you can't really get depreciations in Hong Kong. Now you can, accountingly speaking, we can do depreciation, but when we do the tax computation, we have to reallocate this depreciation in the tax computation. Now, the Hong Kong government is not completely dumb, they understand that if you run a factory, a plant, or even a normal business, you may need to buy some stuff for the production of profit. So what they did to remain consistent with the no capital gain, no capital expenditures, is okay, you can't have capital expenditures, but we'll give you an allowance. So they have allowance systems. I won't cover them because they're a little bit complex, but basically you can still expense some capital expenditure. You just have to do it the right way through this allowance system. The other thing also is that computers, mobile phone, etc., you can expense all that directly under, I think, section 44, if I remember well. You can just expense them straight away in the business. No need to use any sorts of depreciation, allowance, whatever. You can just do it. Okay. So this one thing a lot of people forget, you can expense with your business. So keep all the receipts so that you can reduce your profit through business expenses. Okay. Number one, this applies for everybody, even if you don't live in Hong Kong. Number two, if you live in Hong Kong, you should pay yourself a salary, no matter what, because it will help you to reduce your tax, okay, to start with. If you don't have profits, it will also help you to create a loss that you will carry forward in the future. And then later, when you make profit, you can offset those profits with the losses that you carried forward. So if you don't make much, you can already start with the basic allowance. So you see here, the first 132,000 Hong Kong dollars a year, you pay 0% tax in Hong Kong. So you could totally, if you're in loss, for example, you can totally just pay yourself 132K per year. And then at that moment, it's not taxed anyway. And then it increases your losses that you can carry forward. The next 50,000 are taxed 2%. The next 56, the next 50, 10, the next 50, 14, and all the rest is taxed until 17%, until you reach 15%, in aggregate. And at that moment, it's just 15, unless you earn above 5 million Hong Kong dollars, and then it becomes 16%. Okay, so it's pretty straightforward for the salary tax, really easy. So what that means, you can see here, if you pay yourself 332,000 Hong Kong dollars a year, you will pay less than 5% tax on this salary. And as it's an expenses, it will reduce your profit, right? So just less than 5% on 332,000. But then you will tell me, yeah, but Laurent, you told us before that if you make less than 2 million, it's not 16.5% the corporate tax, but 8.25. And yeah, it's right. So at that moment, what you want to do, you want to get yourself a salary that is under these 8% tax. So here, until 232K, you pay maximum 6%. If you choose to get 50K more, it will be at 10. So let's say you stay until 232 per year, and that will be less than 2% tax on 232,000 Hong Kong dollars, and it's under the 8.25, So this is what you can do, like really pay yourself a salary. If you have kids, if you have elderlies that you are taking care of, you can have a whole bunch of other personal allowances. So it's worth to have a look at with your accountant to what you can account as well in terms of allowances, and this can increase your salary as well. So this is just the basics. The best is to discuss with your accountant. But yes, pay yourself a salary is good. It's good for you. You'll pay less tax in salary. On a certain portion, you will pay less tax on salary than corporate tax. Now, the third tip, rent-free benefits. So the idea basically is to get the company pay for your rent. Now, there's two ways to do that. The first one is through a rent allowance. The second way is through a rent-free benefit. So what is the difference? The rent allowance, the company will give you a lump sum money, an allowance for your rental. Let's say the company will give you 30,000 Hong Kong dollars, for example. And with that, you can rent a flat. If you want, you can rent a flat at $20,000. If you want, you rent a flat at $40,000. But you have 30K to cover those 30, and then the rest you pay by yourself. Or if you are getting something cheaper, congratulations, you are earning a bit more money from this allowance. But basically, as you can see, there's not much difference between an allowance and a salary. It's kind of the same. Just you receive extra money from your employer for the allowance. The rent-free benefit is really different because here the company is reimbursing your rent. So they won't give you money for the rent. What they will do is say, okay, how much are you spending on your rent? 25K, 26K? Okay, I reimburse you those 26,000. Okay. And this is really different because now we are sure that 100% of the reimbursement goes towards your rent. Okay. And so it's not like a normal income. And they are treated differently in terms of tax. The rent allowance will be fully added to your taxable income, your personal tax. Okay, so you will have to pay full tax on this rent allowance. The rent-free benefit, on the other hand, is different. 10% of the rental value will be added to your taxable income. And how this is being calculated, let me show you here in an example, will be much easier. So let's take example A, where A gets a monthly salary of $40,000 and a rent allowance of 20,000 Hong Kong dollars. That means he has an annual salary of 480, a housing allowance of 240, and no rental value, obviously. And the assessable income is 720. Okay, so total 480 plus 240, as I said, we add the housing allowance to the annual salary, boom, 720,000. And then he will be taxed on that. In the second example with B, B gets a monthly salary of 40,000, a rent reimbursement of 20,000. His annual salary is 480,000 Hong Kong dollars. There is no housing allowance, obviously. And then his rental value will be 48, so 48,000. So 10% of 480 of his annual salary. That will then be added to his taxable income. So assessable income will be 428,000. So this difference means that B will pay a 32,640 less than A, just with this simple trick. And I mean, it's sizable. 32,640 is not nothing, right? So, and here I'm being nice. I mean, I'm not maxing up the potential of these rent-free benefits. I'm giving a really small 20K rental, but imagine if this 20K is 40 now, the saving is even more obvious. Okay, so really interesting. If you want to get your rental through the companies, this is the right way to do it. Now, if this is something that interests you, I really advise you to talk to your accountant. Make sure you do it in the right way. If it's with us, I mean, it's really simple. You know, you just ask your account manager and we can discuss it. You can even come to the office, we have a chat. If no, you are with a competitor, just see with them, say, I want a rent-free benefits for my company, and then make sure they do it the right way to avoid any bad surprise. Okay, so I hope you enjoyed this video. If you do, put a like please and subscribe for further videos on Hong Kong tax, company compliance, things like that. I know it's not sexy, but it can be useful for some of us. And if you want to have any communication with my team, don't hesitate to send us an email at info@athenasia.com. And see you in the next one.